Okay, folks, welcome to the Contrarian Trader and our best stock picks video. This is where we review the trades that we like as we proceed into the coming week. And if you'd like to get these videos in the future, if you watch us on YouTube, please subscribe to my channel. If you watch us on StockTwits or Twitter, please follow me. And if you watch us on my website, just enter your email address. The videos will be emailed to you each week, and you will not be spammed. We hate spam too. Let's get on to the video. Yesterday, I posted on StockTwits and Twitter my prediction, and I rarely put out predictions because they're a dime a dozen. Everybody likes to put out predictions. But when I say a prediction, when I make a call on the markets, I want it to mean something. And yesterday, my call on the market was, meaning September the 19th, was prediction today. I'll read it off. Now 200 Dow points or less from a peak and a major correction. IWM, which is the tracking ETF for the Russell 2000, is finished, and it has been for quite some time now. The SPY, the Spiders, which is the ETF for the S&P 500, close to done. The Dow Jones Industrial Average topping out, bearish tone. And whenever I put out a bearish note, it's guaranteed I'm going to get an email challenging my bearish note, and that's fine. I like it. As long as it's professional, above board, healthy debate is always great. And I was mentioning it to a member yesterday. He says, why don't you just tell them on your best stock pick videos what you've been telling us for weeks now? And I said, wow, that's a great idea. So let me show you my charts and what I'm looking at that precipitated my call on a very near-term correction in this marketplace, and that we are very, very close to a top in the Dow Jones Industrial Average. Let's get to it. All right, let's do a little bit of a timeline first. This is the economic data that was released last week. You had the FOMC rate decision released on the 17th. If you go on CNBC.com, when the press conference with Janet Yellen was completed, you had Joe Livornia, perma-bull. You had Diane Swank, perma-bull. And you had Bill Gross from PIMCO on after them, all making statements that it was a dovish statement released by the Federal Reserve. But I disagreed because I was watching the charts, and the charts were telling us that the markets were saying rates are heading higher. And I'll show you those charts in a moment. Then you came to the 18th, housing starts, building permits released. Big miss. And what did the markets do? They rallied, and they rallied big time. Why? It's because Janet Yellen basically said, she's a genius. I'm convinced she is a genius because she gave something to everybody. She gave something to the hawks. She gave something to the doves. And what she left the doves with was that I'm here in case there's weak economic data. So bad news is good news on the economic front. Bad news came out in the housing sector on the 18th. The markets took it and ran. Now, what were we looking at while Janet Yellen spoke? We were looking at the U.S. dollar. It broke out above 84.50, which has been stiff resistance. Do you know that we have been on the largest tear, the largest rally in the U.S. dollar since 1967? I always tell my members, the markets send us signals. Let's go to a weekly chart. Hell, let's go to a monthly chart. The markets send us signals. And here you have it. You have the U.S. dollar at highs not seen since July of 2013. The probability of it breaking out higher is very, very strong. Now, if Janet Yellen were dovish, that would be weak for the U.S. dollar. It wasn't. As she was speaking during that press conference, the U.S. dollar was hammering through 84.50, which was stiff resistance. Then you take a look at the yields. As she was speaking, the 10-year yield wasn't declining. It was rallying. If she were dovish, as perceived by the markets, the yield would have been declining. What was gold doing? Gold, this is a intraday chart, 30-minute chart. Gold was breaking down right here, 2 p.m. Broke right through support like a hot knife through butter. If she were dovish in her statement, gold would have rallied. We were long of GORO, which is a gold miner. We booked our profits quick. Whenever we see price action like this, we knew first out, best out, book profits, move to the sidelines. So while CNBC had their guests on, Joe Livornia, Diane Swang, Bill Gross, saying that Janet Yellen was a dove because they speak their book, we were looking at the charts. And the charts were telling us, the markets were telling us, get out of dollar-sensitive names because the dollar is heading higher, rates are heading higher, with or without the Federal Reserve. Now, I opened up with a bearish prediction on the market. I promised I would get to that, so let's get to it. What you're looking at here is a chart that I put together well over, probably in July. I haven't touched these lines, not once. I drew all these annotations, all these little bubbles with data. This is a quarterly chart, 100-year view, and here was our breakout. Right here in 1982, out of a long, long consolidation, which set us up for the greatest bull run in world history. And I drew these lines. What you have here is the lower band of the rising uptrend channel. Up here, you have the upper band of the rising uptrend channel. We have only hit this upper band twice before, in 2000 and in 2007. In 2000, we had the dot-com crash, subsequent correction, and in 2007, we had the financial crisis, subsequent correction. Now here we are once again. And what happened on Friday that caused me to put out my note was that while we've been looking at this chart, and it's looked pretty much like this from a 100-year view for the past 3 months, you really needed to drill down to a 15-year view because we were still not at that upper band, close to it. However, on Friday, we hit it. We hit it. I have a market price of 17,500. I'm going to stand by that figure right now because we can overshoot this line. If we do, I will be shorting with reckless abandon. There is precedent for overshooting it, as we saw in 2000. We did not do it in 2007. Note the up volume since 2009. The quarter is almost over, folks. Remember, this is a quarterly chart. Note the up volume is just dropping off of a cliff. To be fair, so is down volume because I don't speak my book. We want to make fair and honest observations. But volume has been dropping off of a cliff. And when you're in a bull market, you want to see those up volume bars continue to rise. You don't have that. So is this it? You might be saying, is this what you're basing your opinion on? You put yourself out there on StockTwits and Twitter, you risk your reputation on this one chart, which may have some valid points, but it's only a chart. Well, let's go a little bit further. Dow Industrial Average on a monthly basis. Did you know on RSI in January of 2014, we broke trend. The lower band of the rising uptrend channel was breached, yet we had price continue higher. Volume continues to deteriorate dramatically. MACD is threatening to go negative. When was the last time we had a real serious breakdown on MACD? You guessed it, 2007 on a monthly chart. Again, is that it? Is that all I bring to the table? These few observations? No, there's more. What you're looking at here is the total market advanced decline line. Very, very important. Because when you're in a bull market, in fact, let's do an overlay. In green line chart, you have the S&P 500, and in black and red line chart, you have the total market advanced decline line. So this advanced decline line is the culmination of all stocks, small cap, mid cap, large cap. In green, you have the S&P 500. So you have the S&P 500, which continues to drive higher, yet the advanced decline line put in a double top on a weekly chart. So you have fewer and fewer stocks pushing the S&P 500 higher. That is a divergence, and it's not a healthy one, and it will not last. You also have a breakdown below the lower band of the rising uptrend channel on the advanced decline line. So a double top, a lower high, a breakdown below the lower band of the rising uptrend channel. Trend has now been broken, and the S&P 500 continues to pound higher. Slow Stokes rolling over. And this is what I talk about with members, and I've been speaking about these charts and these observations for quite some time now. And I'll be putting together a video, as I do each weekend, with members called the Week Ahead Commentary, where we review the overall health of the market on the Market Pulse Check video, and then a second video, which is the Focus Stock Analysis video, where we go into great detail on the stocks that we're looking to trade. So here you have a chart which gauges sentiment of investment professionals. And this will be my final chart, then we'll get to some stocks that we're looking to trade. And here you have the mid-cap index, S&P 500 overlaid, pushing higher. Yet over here in black line chart, you have bearish sentiment at all-time lows. Over-optimism, and these are professionals, over-optimism is the mother's milk of one ugly correction. And we are now at historic lows. Don't get me started on the margin debt that's out there, which was at 2007 highs, if not higher now. So if you're wondering why I am so bearish on this market and why I believe that there is a huge correction coming, this pretty much encapsulates it, these few charts. And you can see on Friday, bearish key reversal right off of that upper band of the rising uptrend channel, folks. So you may not have institutions out there using charts like I do. I'm sure you have them looking at these charts. And those that don't have algorithms, they'll have other mechanisms at their disposal, tools at their disposal to help identify when the market is at extreme overbought levels and look out below. So caution flag is on the track. Now, I'm obviously bearish on the overall market. I have been for quite some time. Does that mean I do not trade to the long side? Of course not. I am always hedged, rarely not hedged. Let's begin with Tesla. We booked profits on Tesla. We took advantage of this over $23 correction. I didn't get out at the bottom. I wish I did. But we called for this target to be reached. We had a nice profit. I booked it, moved to the sidelines. So that was a good 50, I think it's posted on the website. I think it's a $5,300 gain on Monday of last week. So a nice way to start off the week. GORO, we booked profits here. This is the day of the Fed announcement. We have this bearish key reversal. We booked profits well before it went red. We saw this one coming. And then on Friday, it really broke down. And my suggestion is, if you're long of the gold miners, look out below. They are heading lower. That goes for GDX as well. The GDX will probably come down to support. I'll go over that chart with members on the Week Ahead Commentary. Okay, now let's get to the stocks and ETFs that populate my screen. And many of them, I was very selective with the ones I chose. Many of them are dollar-sensitive names, energy, currencies, because the U.S. dollar is heading higher. Commodities, currencies that trade inversely of the U.S. dollar or versus the U.S. dollar, like the yen, FXY, are getting hammered. So let's begin with the FXY. RSI is at 13.95. We're seeing some bottoming action. And I'm going to go over multi-period charting with members. We do like the FXY. I believe that we are near a bottom. We want to pull out to multi-period charts, meaning monthly, weekly charts, identify support and resistance levels to determine what is our best risk-to-reward entry point. FXY is one of our top picks. ANTH, not a dollar-sensitive name, which is why I picked it. Oversold with RSI 10.56. Candlestick formations looking fairly bearish. Volume to the upside still very, very high. So again, we'll be pulling out to monthly, weekly charts to identify support and resistance levels to identify our best risk-to-reward entry point. And we'll be doing that on the Week Ahead Commentary with members. Also, intraday charts to see whether or not we're putting in higher lows and whether or not we're starting to see strength intraday. SLV, these are the silver iShares, getting hammered like a baby seal and will go lower. I would not catch this falling knife. But the key to trading successfully is, once again, I always say this to members, the markets send you signals and the market leaves tracks. What does that mean? What I mean by leaving tracks is that we know where historic support and historic resistance is, so we leverage them. Those are our clues to identify where we have the most probability of seeing buyers and sellers. So we want to leverage that information. So I don't like hearing that the markets are rigged, we can't win in the market anymore. That's BS. You need to know what to look for to profit in the markets because, again, the market sends you signals. If you're looking at intraday charts and day trading, can't help you there. Far too volatile. But if you're using a swing trade philosophy or a position trade, meaning intermediate trade philosophy, you can make money by using daily, weekly, monthly charts, and in my case, quarterly charts, to identify the best risk to reward entry points. AUY, Yamana Gold. This is going lower. It's not time to get involved with this name. This is a monthly chart. So far this month, it's sliced right through historic support. It's probably heading lower. I'll be going over the daily chart and the weekly chart with members on Sunday. But we do like Yamana Gold. WPRT, Westport Innovations, weekly chart. This is another one. Sliced right through support at 1242 like a hot knife through butter. When you make these observations, when it does not hold the support level, you need to pull back. In this case, we don't know where historic support is. So we need to pull back using a monthly chart or extend out our time frame using a weekly chart beyond what we see here. But we'll do that. We'll identify where historic support is and then plan our entry point by using the weekly, monthly, daily, intraday charts. And that's a strategy that we use. And it's not simply by using the price. We use the volume. Note how volume rose last week. However, price rallied off the lows of the week. So what we want to do is we want to investigate. We want to be curious. We want to see whether or not is Westport beginning to show some signs of strength. Our buyers beginning to move in. So we'll take a look at the intraday and daily charts. But first, we want to know where the stock has been historically. And that's it, folks. Again, if you get any value out of these videos, if you want to get them in the future, please. If you watch us on YouTube, subscribe to my channel. If you watch us on my website, enter your email address. You will not be spammed. These will be sent to your email box. And if you watch us on StockTwitch or Twitter, please follow me. Everybody have a profitable trading week. Just be careful. Please be aware of where we are on a historic chart. My quarterly chart of the Dow Jones Industrial Average. We have the advanced decline line breaking down. We have huge margin debt. And I teach my members what that means to the overall market. When a stock correction begins to take hold, it becomes a bloodbath because of high margin debt. You also have bearish sentiment very, very low on the part of investment professionals. That means that these guys are out there taking their fees every single quarter and they're telling people, their customers, to buy stocks. We don't listen to the so-called investment professionals. We look at the charts. And everybody have a great trading week again. Enjoy the remainder of your weekend. I'll talk to you soon. Be well.